Ladies and gentlemen, welcome back to the channel. Tesla stock is getting absolutely destroyed today, down about 4.5%, and it's three parts. Apparently, there's what could be a new pandemic discovered in China. We have dramatic weakening in the U.S. economy, and we have some company-specific news for Tesla. And all of this kind of feeding together is creating a pretty rough day for Tesla, but it's a rough day for the broader markets as a whole. And I will share all of that with you in this video. But first, we need to start with this new, what could be, pandemic in China. So this is actually not like super new. This came out 14 hours ago. So we knew this heading into the trading day today, and it was really first circulated by Daily Mail. It's basically just a new coronavirus. Now, this lady that discovered this in China at the Wuhan facility is known as Batwoman. It was found in a bat, and I guess the concern would be that it could spread like the previous, coronavirus. And it's obviously a little bit different. It says here in their study, she noted that HKU5-CoV-2 was more dangerous than its predecessor virus. So apparently more dangerous than the previous coronaviruses. She says structural and functional analysis indicate that HKU5-CoV-2 has a better adoption of human ACE2 than lineage 1 HKU5-CoV. Authentic HKU5-CoV-2 infected human ACE2. That's basically the receptors that can actually pick up these viruses. Expressing cell lines in human respiratory and enteric organoids, this study reveals a distinct lineage of HKU5-CoVs in bats that efficiently use human ACE2 and underscores their potential zoonotic risk, noted the researchers. So basically, a worse coronavirus discovered in a bat in China. This at this point, it's not like human to human transfer. It's not, even detected in humans. But I guess that's the concern. If it did spill over to start infecting humans, you would be in another, COVID round two, essentially. And that is causing a lot of fear in markets. Look at the VIX. The VIX is up 15.2% today. As this news really got circulated, there was very little fear in the beginning of the trading day. And then it just ramped up throughout the trading day. And markets, same thing. I mean, like, they just died throughout the trading day. Just got worse and worse and worse. But the thing that I'm, a little more concerned about is the bond reaction here. Bonds were really getting a bid on this news circulating, and bonds have held up. So what investors are doing, they're going out and they're buying bonds because of, fear for the stock market or, just fear in general. And that's something definitely worth watching, because when bond investors go out and buy bonds like this, when they're fearful of a certain event, that's telling you something, because the bond market is a lot bigger than the stock market. So I think there's some fear at this point. And unless we get like human to human, transmission of this new coronavirus, I think it will ultimately die down. I don't think this is, it's too early to say whether this is the start of a larger problem or not with this coronavirus. But you also have the markets kind of freaking out because of the economic data that came out this morning, that came out really bad. And we'll get into that in a few minutes. But really, it was this, convolution of different things coming together all at the same time that caused this injection of fear in markets and for stocks to sell off, which is directly impacting Tesla a lot. Here you could see a headline coming out right now. It says the Dow dropped 700 points as investors dump stocks on worries over the state of the U.S. economy. So I think that's going on. It's the coronavirus situation. And mixing this together, it's just really not a good outlook. You also have some tech tariff announcements that we will talk about later on throughout this video. First and foremost, the big news today says a high-level Japanese group led by former Tesla board member Hiro Mizuno and including a former prime minister is going to try to persuade Tesla to invest in Nissan. The group believes Tesla might be interested in acquiring Nissan's manufacturing plants in the US. Several board members at Nissan are aware of the initiative. The plan to approach Tesla comes after Nissan walked away from Honda's $58 billion merger proposal. Elon Musk actually commented on this and said, "The Tesla factory is the product. The Cybercab production line is like nothing else in the automotive industry." And I really take two things away from this statement by Elon Musk. Number one, doesn't seem like Tesla's too interested in buying Nissan's factories, since Tesla factories are the actual product, quote unquote, as Elon says. And the Cybercab production lines are already built, and more are being built. That's what I take away from this second line here. That they're pretty much already done. That is bullish. And I guess Wall Street missed that part today. Now, this is pretty typical to have a stock sell off when there's rumors or actual confirmation of a buyout of another company. It, takes cash. Sometimes companies have to dilute shareholders. That's not the case here. But it would mean Tesla spending money to acquire Nissan or Nissan's facilities. Don't think that's going to happen, as Elon Musk kind of confirmed there, but it's still something that's kind of like another hit piece on Tesla. It does cause fear. Also in the news today, Hyundai's CEO says they'll implement autonomous driving through quote unquote partnerships, which probably means Tesla. Again, Wall Street, yeah, they didn't pay any attention to that one today. Nor did they pay attention to Top Gear that says the Tesla Model Y is night and day better than the old one, calling it pretty much a new vehicle. Top Gear said this about the new Model Y, quote, "The new Model Y is night and day better than the old one and genuinely feels like a different car. More attention's been lavished on general rigidity, damping and springs, better isolation and noise reduction. So the Model Y is quieter and more forgiving, exactly what you need from a family car. It's not the most precise of things to drive, but it feels more luxurious and expensive, all because it rides with greater sophistication and clonks through potholes less, if at all. The steering is also better, not because it's laser precise, but because it's progressive and calm. And the whole car brings no surprises. Again, reliable reactions and consistent grip is what owners will look for, rather than Larry oversteer or aggressive turn-in that makes a car feel sporty, but also puts your pets, children, Joels in compromising positions." Tesla has now sold and delivered 10,000 vehicles in Ireland, 9 years after entering the market. And another headliner here, Tesla recalls 380,000 vehicles in US over power steering assist issue. Aren't you sick of this? This could be another reason why Tesla's down today, because people don't understand the difference between a actual physical recall and an over-the-air software update. This news came out early this morning, and Tesla has already released an over-the-air software update to fix the issue. Tesla has stopped sales of the new Model Y launch series in various countries all over Europe tonight and introduced the new lower-cost Model Y rear-wheel drive, long-range rear-wheel drive, and long-range all-wheel drive. While still in the US, you only have the launch series option for the new Model Y. If you want to get the long range rear wheel drive, long range all wheel drive, or performance all wheel drive, it is still the older version of the Model Y. So I would imagine they're getting a lot of demand on this launch series right now. We also have this headline today, which I honestly don't know what to think of this. It says India to count only 5% of EV investment towards charging for tariff relief for foreign automakers, according to a document. India to finalize new EV policy next month. Tesla's starting to sell in India right now. They have over a 100% tariff on outsider foreign vehicles. That's going to come down dramatically. We don't know what that number is going to be, but you know, I'm sure it's going to come down quite a bit, at least for Tesla. And here's a little fun fact. The average time spent at a Tesla supercharger has fallen by 22% since 2017. Charging has just gotten a lot better since 2017. Now, also impacting Tesla stock today is likely the Rivian earnings, and specifically the Rivian guidance. Rivian guided for 46,000 to 51,000 vehicles to be delivered this year. That would be on the low side, down to levels you haven't seen since 2022 at least. 2023, you had 50,000 deliveries. 2024, you had 51,000. And now they're projecting a really low number. There's two reasons for that. Quote unquote, Rivian CEO says, it's a challenging demand environment. We believe external factors could impact our 2025 expectations, including changes to government policies and regulations, like taking away the tax credit and maybe tariff issue. What I really think this says is one of two things. Either Rivian has a lot of competition from Tesla, and Tesla's cheaper, lower price vehicles, new Model Y, lowest price Cybertruck coming out this year, are going to impact Rivian's demands. That's the optimistic outlook. Or the more negative implication for Tesla would be consumers are just not in a great place. Interest rates are finally starting to bite. And, well, if people cannot afford to go out and buy a vehicle, they can't buy a vehicle. And that would also be bad for Tesla. So this is either saying Rivian's going to have a lot of competition pressure from Tesla, as Tesla is really their main competition at this point, or the consumer is just really not doing good, which is not going to be good for Tesla either. Audi today is admitting its interior quality is worse now and vows to do better in the future. Now, option activity so far today for Tesla is, well, still more positive than negative, but not nearly as good as what we are used to seeing. You have 129 different trades totaling $88.28 million with a positive order value of 56%. Again, keep in mind, Tesla is currently down about 3% at the time of recording this video, so this number could change here in the last hour or so of trading. What is not changing, though, what still continues to look good, is what these short sellers are doing. Short sellers are yet again covering 110,000 shares in Tesla. Like, you really can't make this up. Every single day, short sellers continue to cover. I mean, yesterday you had like 500,000 shares that were covered. The day before, you had 1.5 million shares that were covered. And now today you have over 100,000 shares that are being covered. And this comes after Tesla's short interest is already the lowest in its entire history at 2.13%. Following even just the last couple of days of activity from the short sellers covering, you're going to see this number fall probably down to 2%. You may even break into the 1% range for the first time ever. You've never been less than 2% short in Tesla, ever. It's never happened before. This is telling you that big money is bullish on Tesla to an extreme. I mean, you've never seen hedge funds and institutions this bullish on Tesla stock. Now, before we get into the big headlines that caused markets to fall today, specifically big tech, let's take a look at the data that came out here. And we had a couple different data sets. Composite PMI came in at 50.4, lower than the estimate of 52.7. Manufacturing PMIs came in at 51.6, pretty much in line with the forecast of 51.5. And global services PMIs came in at 49.7 versus the estimate of 53. So services now going negative for the first time in a long time. There's some concerns about economic growth, I would say, at this point. If services continue to weaken, the economy is not going to be in a great place. And I think that's part of what's going on with the markets today. Existing home sales came in at 4.08 million, coming in lower than the estimate of 4.12 million. Existing home sales month over month came in at negative 4.9% versus estimates of negative 1.7%. Michigan consumer sentiment final numbers came in at 64.7, down from 71.1 in the prior reading. So that's a big drop and about 3 points lower than the estimate. 5-year inflation expectations actually went higher from 3.2% to 3.5%. They were expected to go up to 3.3%, but jumped all the way to 3.5%. So not great. Consumer expectations at 64.0 versus estimates of 67.3. Current conditions came in at 65.7. Last month it was at 74. And that's dropped from 68.7 in just the reading we had, 2 weeks ago. It says 1-year inflation expectations remained the same at 4.3%. This is very much a political survey. Okay, that's it. So when you see inflation expectations rising, it's Democrats that are rising that. Republicans expect almost no inflation. Independents expect around 3% inflation. It's the Democrats that are expecting a lot of inflation from tariffs that are pushing these numbers higher. Now, the Pentagon says that they have hit pause on a plan to carry out mass firings of civilian employees. But this is really the big news today that caused tech to sell off. Quote, Trump eyes tariffs to counter digital taxes hated by big tech companies. Trump to direct USTR to weigh digital tax remedies, people say. And a lot of people suggest that this is actually good news for Apple and, Facebook. But the issue, I guess, would be if, these countries retaliate back. And I point out, Meta and Apple, but really all big tech, okay? If there's a trade war within even tech, not even just physical things like aluminum and cars, but if this is something that spreads into tech and IP, that would be a bigger problem for, again, big tech, which is a large portion of our markets. Do I think this matters in the grand scope of things? Absolutely not. But days like today, where you have economic data that is weakening, services that are essentially like plummeting in the last 2 months, and inflation expectations that went higher, and the weird consortium of news we had today, add this on top, and yeah, you're going to have a bad day for markets. U.S.-Ukraine mineral talks at a, quote, make or break moment for Ukraine. U.S. and Ukrainian officials negotiated all night and Friday morning in an attempt to conclude a minerals deal and halt the deterioration in relations, a U.S. official and a source with direct knowledge of the issue told Axios. U.S. Treasury Secretary Bessent and China agreed to remain in communication. The U.S. administration believes Kurdish oil sales could help to lower oil prices, offset a drop in Iranian supplies. And the U.S. administration asked Iraq to resume Kurdish oil exports quickly or face sanctions alongside Iran. China's Vice Premier He says China expressed solemn concerns on U.S. tariffs on China. Trump says that we need to double the energy that we have right now. He says companies need more electricity for AI, and companies are coming in. They need electricity. Trump reiterates 25% tariffs on cars coming on April 2nd. Trump says that we're going to have a lot of chip makers coming into the country. Trump says he spoke with Apple's Tim Cook on Thursday, says Apple is shifting plants because of tariffs. Apple will build plants in the US, not Mexico. That is official. Now here on the day today, the CNN Fear and Greed Index is at 43, down from yesterday being at 45. So you are in fear. Market momentum is fear, stock price strength, extreme fear, stock price breadth is neutral, put and call options, extreme greed, market volatility is neutral, safe haven demand in extreme fear, and junk bond demand is neutral. If we take a look at the percent of stocks trading above their 50-day moving average, seeing a further deterioration here, down to 47.2%, down about 2% today. So less than 50% of stocks trading above their 50-day moving average is not a very strong market. So, this is seasonally the worst 2-week period for markets in any given year since 1928. So it's not a shocker or surprise. Markets are moving lower, yesterday and today. But, we're already pretty weak. So how much downside are we going to see at this point? I guess we'll have to see, but I'm not super concerned about that at this point, although there's definitely some red flags we need to be watching for and to see when the Fed pivots, because if the Fed waits too long, then we're going to have an issue. Now, we dropped from the highest level of bearish investors in multiple years down to 40.5% of investors that are bearish. That's still very high. 30.3% of investors that are neutral. That's pretty high. And bullish investors, which is very low, at 29.2%. Again, people are just not, bullish right now. And that's something that from a contrarian standpoint would be seen as positive for markets. So let me know what you think about this information down below in the comments section. Have a fantastic rest of your day, and I will see you in the next one.